Hey guys, what's going on? It's Jason here. Today, we're going to be going over 4 great stocks to buy right now during this downturn on the market. These are stocks that have some great upturn value. If you guys could, please hit the like button below. If you're on a sub, hit the sub button, and we'll get right into it. First off, we're going to start off with NIO. NIO is a smart EV car company. NIO is one of my top picks right now in the EV car market. It's looking to making its move from China over to America in the next few years, also moving into the European market. Whereas everybody knows, obviously, the China market is a big EV market right now. And when it moves over into Europe and it moves over into the USA, it's going to be even a bigger market. NIO is a great EV car manufacturer. They also are one of the only EV companies that have the battery swap technology. Nobody knows if they're going to use that over here in the US or not. That is obviously, sight unseen yet. They might go the usual route of the charge route over here in the United States. Obviously, that's how it is over here as of right now. Over in China, though, they do have the EV battery swap technology, and it's working great over there. But again, we don't know if that's going to switch over to the American market as well. NIO has been knocking it out of the park these last few months. Month over month, and also the last quarters as well have been up and up and up. Q4 earnings come out on the 1st this Monday, which should be a good boost to the stock. As you can see over this last month, before the downturn started happening in the market, NIO got up to $64.60. But since then, obviously, again, it has went downhill. But a lot of stocks in the EV and tech industry has went down. Right now, NIO is setting at $45.78. In the after hours, obviously, it's at $46.96. Still a great buy. I think NIO under $50 is a heavy buy for me. I do think NIO in the next year or so should be anywhere from $80 to $100. Again, this is not financial advice. This is just for entertainment purposes only. Make sure you guys are doing your own research in these companies as well. As you can see here on Tip Ranks, they do have a high price of $80.30. That's within the next year. They have an average price of $66.80. As you can already see, we already hit $65 before this downturn. So I do think we are headed more onto the high side of that $80 mark this time next year, especially with the new earnings coming out on March 1st. Hopefully that will boost up NIO some. It all depends on how the market is acting next week. Obviously, we're all looking for J-Powell to talk about more, money being flowed into the market, which is he's already indicated he's going to do. Also, trying to get those treasury notes down. I think a lot of that's already trying to get priced into the market anyway. So hopefully, it's coming up week. We do see a bigger surgence in stocks again, and I do think NIO's earnings should help it. They have a low side of $54. So even on the low side right now, you're making $9 at least on this stock. I still think we're going to see anywhere between the average of 66, we already have seen the 65 before the market downturn, and then the high of $80. As you can see here, there's a ton of institutions that have been loading up on NIO at this price point. You got so many funds here, so many ETFs. Again, if you want to be a millionaire, if you want to be a billionaire, you have to kind of think like these bigger guys within the industry, right? They're buying up gulps and gulps and gulps right now of NIO. I mean, the list goes on right here, especially since like the 22nd on, when NIO started falling from the $65 price point. There was tons of people loading up, even at the $65 price point. We still had tons of people loading up on NIO. So I did pull up an article about NIO's earnings and things like that real quick. That I can read off that, and that way you guys can understand why I'm so excited about NIO at this price point and why I'm buying more. Earlier this year, NIO said it had delivered 17,353 vehicles in Q4. While it's tiny compared to Tesla, obviously at 180,000 during the same quarter, NIO's number represents a 111% increase year on year and beat the upward end of the guidance of 16,500 to 17,000 vehicles delivered. That was the expectation. It delivered 17,353. When NIO releases earnings after the close of Monday, March 1st, it's expected to take a loss of 7 cents per share, which is actually really good in its industry right now. According to the third-party census analyst estimates, revenue project of $1.01 billion, up 148% from a year ago. So having it up 48% from a year ago is really good in the EV market. The options market has price and expectation share price move of about 11.5% in either direction. So that means it's going to go 11% up, 11% down. Obviously, nobody knows how the market's going to move right now on Monday. Obviously, I am hoping for a more up market because we have been down more of a red market the last 2 weeks. Looking at March 5th options expiration, put activity has been highest at the 35 to 40 strike, but more activity has been seen to the upside, particularly the $50 to $60 strike. So there's a lot of $50 and $60 call options in place right now. So people are betting for this stock to move up, which is a great sign. Where do I see NEO going from here? I think NEO, again, under $50 is a great buy. If I see NEO pull back again to say, under $45, I'm probably going to load the boat some more again like I did the other day. I think anything under 45 is crazy price. I think anything under $50 is really, really good as well. Again, it was just a little bit ago, right back up here when they were at almost $65, right? Almost 65 bucks. That was just a week and a half ago before the market started kind of tumbling. But we could definitely see NEO go back up there again within the next few weeks, or it could just be more of a slower growth. Until then, we'll see on Monday once those earnings come out. Next up on our list is our good boy Amazon. I think everybody knows Amazon. Amazon right now is selling at $3,092, which is actually, I think, a really good deal on Amazon. Just a little while back, they were almost at $3,500 before the downturn kind of started, kicking in. We had a little bit of upturn again right here to 33, and then this last few days we kind of tumbled back down to $3,087 in the aftermarket. I do think there's a ton of big potential in Amazon. That's the reason why I put them in this list of the top ones I'm buying right now. And obviously, I would suggest to buy. Again, nobody has to do these things. I am not a financial advisor. But I definitely think these are stocks that you should be looking in for long-term growth. These are long-term stocks, again, that have huge growth potential. Now, we can pull up Amazon over here on TipRanks. TipRanks has Amazon average of $4,102. Which is a pretty big upside from there. But they have a high price of $5,200. And I wouldn't be surprised if you end up somewhere in there like $4,400, $4,500 this time next year, as long as the markets are going good, right? But again, these are stocks that will hold down your portfolio, because obviously everybody wants to have those, smaller stocks that can have some good potential for growth. These are good stocks that hold down your portfolio and keep it in the green while your other stocks aren't doing so well. Now, we can bring it up over here to the institutional ownerships. Again, there's lots and lots of institutions right now loading up on Amazon at that price point, right? I mean, you can go to Fentanyl and just look at all the institutional owners that have been buying in. These are all in the 26th, by the way, at this low price point of $3,000. We just now got to 25th. So you can see there's a ton and tons of upside to Amazon here. Now, Amazon just had their earnings come out as well. Their EPS was $14.09 versus the $7.26 that analysts anticipated. So they almost doubled what the analysts were thinking would happen, right? The revenue exceeded analyst predictions as well, obviously. Their ASW cloud, so you're not just buying to Amazon, you're also buying into the ASW and ASW cloud. The revenue growth is a little bit less there, but it's still a great thing to be buying into. You're not just getting Amazon as a whole, you're getting everything. So here's what happened during Q4. Amazon provided both a significant earnings surprise and a major company news in Q4 earnings report. The company reported AWS revenue of $12.7 billion, slightly below analyst expectation of $12.8 billion. Again, that's not really that big of a deal. It's $0.1 billion. And obviously, it's a big figure in numbers wise. You got that much money, you know what I mean, in your hand. But still, 12.7 to 12.8. So you're slightly under it, right? But it's still a 28% year-over-year growth. So 28% growth year-over-year on AWS. Earnings and revenue, on the other hand, surpassed analysts' predictions. Remember, Amazon's EPS was $14.09 for the earnings quarter, representing a 117.8% year-over-year growth. That's huge growth. Big growth. This dramatically exceeded analysts' estimates of 12.1% year-over-year. So they wanted a 12.1%, right? But they got 117%. That blows it out of the water. Improvement in EPS in the quarter. Revenue of $125.6 billion represented an increase of 43.6%. Remember, Amazon is a massive company, right? They're a brand that's been around for a while. They're established, and they're still having they just had another 43.6% year-over-year growth. That is insane, exceeding the analyst expectation of 36.9% year-over-year growth. The company also announced, obviously, that CEO Jeff Bezos had transitioned to the executive chair, and that AWS CEO Andy Jassy would be taking over as Amazon CEO, which isn't that big of a deal. Again, you still have Jeff Bezos in the executive chair, and you have a great guy, Andy Jassy, coming over and taking over the Amazon side, and they have somebody else stepping up over the AWS side. Again, it wouldn't surprise me if we seen this price anywhere between $4,000 and $5,200. My guess would be around $45. you know, 45 to 43, maybe 4,200 area is where I think we'll see this next year. And again, right now it is actually trading for $3,092. So that's a huge upside to your money. And again, I do think these companies I'm mentioning right now are companies that are long-term holds. These aren't companies that you want to just like buy in and get out. It's not like a pharmaceutical company or something like that that you want to get in and get out. These are companies you want to hold and hold on to for at least a good 5 years. I think Amazon's got tons of room to grow. Next up on our list is Facebook. And I know a lot of people are going to be like, Facebook, we don't use Facebook. But you got to remember, it's more than just Facebook, right? Facebook also owns, let's say, you know, if you're over liking pictures all the time or doing stuff on Instagram, Facebook owns that. You got WhatsApp as well. And it's just a big company with lots of room to grow. They have, I think, like 3.3 billion users, monthly users across their platforms, which is nuts in general. I think it's like 2 billion users use Facebook alone every month. Those are monthly users, right? So they have a large group of people. And not only on that, man, their advertisement side is growing exponentially as well. The people are actually saying that the online advertisement is going to break, TV and all those things this year as well, which is highly possible. And that right there is one reason why I picked Facebook. Not only on top of that, they're also working on their new Facebook Watch as well. And again, I know people are going to hate on Facebook. I get it. But they're money printers, man. I've had Facebook for a while, and they've done great for me. And I do think, in terms of growth potential, I think it's really good still. Maybe it's not as high as like an Amazon, but I still think the L potential is definitely there, and I definitely think we'll see this grow throughout the next year. We'll pull up TipRanks here. TipRanks has a high on Facebook of $375, an average price of $341, a low price of $205. They sometimes have some crazy, I mean, even on Tesla, they had Tesla's low price is like $65. We all know that's not happening. Again, I do think once this downturn stops, obviously you want to pick a good spot to get in on Facebook if you're going to get on it. Again, I do think we could definitely see this $341 price point, especially if their new Facebook Watch does hit it out of the park. And again, it's more than just Facebook, right? You got Instagram, and you have WhatsApp and some other things as well, not including their marketing side of things. Facebook institutional ownership has been on the uptick as well at this price point. Since it's down right now, you can see right here, there's tons and tons of institutional people buying in right now. If you want to be a millionaire, you're gonna think like a billionaire, you have to go by them. They know more than we do in the market, right? They definitely know more than me, I'm sure. They have insider information. I'm sure they got all kinds of stuff. Let's be honest. And these are all in the 26, by the way. These are all bought into the 26, just like Amazon. There's one right here. It's sold. One. We went down this whole list, and there's one sale right here. Right, Sculptor Capital. One out of all those. Again, I'll read you guys on why Facebook is. I think Facebook is going to grow. Facebook is the largest social media company on the planet. A total of 3.3 billion. That is with a B. People use at least one of its family apps. That includes Facebook, Messenger app, Instagram, and WhatsApp. The figure is up by over 300 million from a year prior. So they're still growing massively. 2019 was 300 million less than 2020. Advertisers can target nearly half of the population of the world by partnering with Facebook alone. Moreover, marketers can pick and choose the scale they want to reach globally or within a zip code. That's crazy to think about, right? They can hone in and use advertising. The reason why I think Facebook's going to grow because their digital advertising is massive potential. People who use Facebook voluntarily share personal information about themselves, such as their age, relationship status, interests, and where they went to college. Again, this all plays in to that advertisement in why people are buying, why companies are going to Facebook for advertisement more than even so like TV or anything like that. So they can get right down to their key demographics. Those factors contribute to Facebook's ability to generate the highest average revenue per user. So right now they have the highest average revenue per user, and YouTube does really well on this as well. But it's crazy to think that Facebook is even breaking everybody right now, and they're adding more users than most apps are year over year. Even at its old age, Facebook's been out for a long time. On this digital marketing right here, right? Digital ad spending in the U.S. is forecasted to grow from $132 billion in 2019 to $243 billion in 2024. See that growth right there from 132 in 2019 to 243 billion with a B. And Facebook's going to be taking a large a large portion of that, right? And on top of that, you got Facebook making their at home portals. You got them making their new Facebook Watch set to come out at the end of this year or sometime next year. Again, I think this is all great room to grow on top of this, on top of their user base and the advertising market there. It's one reason why I picked Facebook there. Again, I do think their potential to grow over the next year is really good. The next one up on the list is Xpeng. I love Xpeng. You guys know what I talk about a lot. It is another EV manufacturer car company in China, moving to Europe now. They've been shipping cars over there little by little, moving into that market space. And eventually they're looking to move over to America. Why do I like Xpeng so much? They have really nice, cheap, affordable cars, right? EV cars. Their SUV is super cheap. It's moved over to Europe. I think Europe is a right spot for Xpeng. Obviously, the China EV market is big. They sell tons of cars, and it's only growing, right? And once they even moves into the United States, I think it's going to do really well. I think it'll do really well here as well, just because of how nice their cars are and how reliable they have been. Again, they have been reliable. A lot of independent car reviewers and things like that done a lot of reviews on them. One reason I'm kind of bullish on it, obviously they've done well and they keep doing well. Their year over years, their month over month, and their quarters are better and better and better. Right now, Xpeng is trading in the aftermarket. It was in the aftermarket at $34.34. I think if you can get Xpeng under $35, that's a steal, right? I think that's a steal. I think anything under $40 is a great buy-in price. If you can get it under $40, good buy-in price. Because I think you're gonna make some good returns on your money within the next year. The only reason why these stocks are down right now is because the market as a whole is down, right? So if you've already have shares in this company at a higher price, I think you should buy your buy-in price down, right? All right, let's bring up Xpeng real quick over here on TipRank. TipRank has an average of $45.58. It has a high of $70. I would think this car company next year, if everything's going great, the market's doing good, right? I would think this is definitely going to be over $60. It might hit 70 as well. It could even go higher than that, right? I've seen a lot of these estimates go higher than the high estimate. I'm going to play a little bit conservative side and say if the market's doing great, I do think Xpeng could be a $60 to $65 this time next year, which almost be double your money. And you're not going to double your money in a bank. Again, especially if they do get a good move over into Europe, which they have been doing the last few months. They've been shipping some cars over there a little bit at a time to test the market. And they've been selling great over in Europe. And I do expect them to continue to do that because they are a nice, cheap car. Again, you can look into Xpeng. You should definitely do your own research. Obviously, Xpeng is a little bit smaller company, so you don't have as many buying in like crazy. But you do have a lot of new people buying in and during this past downfall on Xpeng's price because of the down market. Again, you can go down the list right here. Just in the past week or so, you've had some big buy-ins. There's 3.9 million right there. There's a 1 million, 1.4 million. Yeah, there's a ton of them in here. 500,000 right there. There's a lot of good buys in here. Remember, I do also own Xpeng, just like Neo, just like Amazon, just like Facebook. But I do think Xpeng has a tremendous upside. Not only are their cars like on the cheaper side of EV, they're not like cheap in terms of like they're cheaply made. They're cheap in terms of like the price is cheaper than most EV markets, right? And they're actually nice quality cars from all the independent reviews, right? I don't own a Xpeng. Maybe one day it'd be awesome when they get to America, I can own one, right? Rest right here, obviously, Xpeng is to release the new P7 sedan with lithium iron phosphate battery in March the 3rd. So March 3rd, they're going to be releasing their new P7 sedan with the lithium iron phosphate batteries. Xpeng's new P7 with lithium iron phosphate battery will be released March the 3rd. So this coming up March 3rd, they have a new car coming out, the P7 with the phosphate battery. According to a report in China-based media outlet that the quoted company insiders, P7 is Xpeng's super long-range smart sedan, has the post-subsidy base price of 229,900 yen, which is $35,000, which is actually a really good price point for a nicer sedan, right? This new version, while the range of 480 kilometers, the report said, while the current version has a maximum range of 706 kilometer meters. Why it matters, most EV makers are now shifting to lithium iron phosphate or LFP batteries, giving the supply constraints plaguing the widely used nickel batteries. LFPs are cheaper, but usually result in lower range. Tesla uses LFP batteries in its Model 3 car manufacturing at its Giga Shanghai factory. Xpeng focuses on the low to mid end of the market. So again, they do have a lower to mid range market price for their EV cars. A move towards LFP batteries is likely to improve the price competitive of its cars. So again, that's probably going to bring their price down. So these batteries are cheaper, right? Xpeng shares closed obviously down 14% at $34. Xpeng, like NIO, does have a big growth potential. That's the reason why I put them on this list. At selling under $35 to me is a steal of a price, because I do think they could be $60 to $70 area within this time next year. You can tell they have been up in the mid $55 to $60 range before they came down because of the market coming down. So that's one reason why I'm also confident that we'll see Xpeng rise. But that right there is the top 4 that I'm buying in right now during this market downturn. Obviously, there's some more in there, maybe like Apple or even my Tesla and things like that I'm going to be buying in as well. If this is something that you guys like, make sure you guys hit the like button below, hit the sub button, and I'll see you guys in the next one.